talking about the IT sector, we have Sandip Agarwal joining us, who's been tracking the IT sector for a while now. Sandip, are you surprised by the kind of move that we are seeing in some of the IT companies? TCS up 6%. I mean, yes, there's a beat coming in on the top line with the constant currency at 2.2%, surpassing all expectation. But the management is still not calling in growth. They are saying we don't have enough evidence to call a turnaround. Then what evidence does the street have?
No, so, Sonali, you have to understand this in a little more detail. Basically, this is the beginning of an upgrade cycle. If you see the data of last 4-5 quarters, it is very exciting data. The attrition levels for a company even like TCS has fallen from peak of 28% to 12% now. The subcon cost has come down from higher than 10% to now less than 5%. So basically what it means that, the margins are at their bottom. And despite that, there is an improvement in margin in this quarter. So if you see 4 quarters back, same quarter last year, the margin was 23.5 and now it is 24.7. So there is a 120 basis point improvement in margin despite the wage hike impact which is there. So it implies that this year they will end somewhere around 27%. Now for a company like TCS where EPS sensitivity to 1% margin is around 5%, the point is that if there is a 2% jump in margin, then we are looking at 10-12% EPS upgrade. So I think this move is justified and I see another 10-15% move in TCS, Infosys or the large name. And the primary reason is that there is a upgrade cycle which always begins with margin improvement followed by revenue growth. So I think, investors are right about the move, and while management may be cautious, management is cautious because they don't see very high jump in revenue growth immediately, and in B2B business, no one can call the turnaround. Let me tell you. So the best thing to monitor is the margin turnaround, and the margin turnaround has started since last quarter because of sharp fall in attrition. So I think the move is justified and there is further move which will happen.
Sandip, good afternoon. Vinny also joining in the conversation. So you're expecting the turnaround in the margin. You are saying it started and you could expect a further move, especially coming in for those big IT companies. But what's the word for those mid-cap IT companies that one should be watching out for? So KPIT that you're keeping an eye out on, KPIT Tech, Birlasoft. What is it that you are expecting there?
So see, in mid-cap IT companies, you have to again bifurcate the companies into two because not everyone has everyone has every capability. So you have to break the mid-cap companies into two types. One is the ER&D companies. The other is the IT services company. I think the IT services companies at this valuation are little expensive. While there will be margin improvement and EPS upgrade there also, it will be across the sector. But I will not, I don't think there is much there. But the ER&D companies, you have to remember it is a 10-year structural story, at least maybe more. Because ER&D outsourcing has started just last 2-3 years back, and the penetration level is 1/5 of the IT services. So the growth in ER&D will be at least 2 times of the IT services for next 10 years, and hence the multiple as such. And within that, the players are very less. There is only Persistent, KPIT, Tata Elxsi, LTTS, handful of players. So onward and all few other names. So those few handful of names, they will benefit disproportionately in my view. So I think this mid-cap ER&D companies will do very good. I will be concerned on mid-cap pure IT services firm on the valuation.
ER&D, yes, is a much well-discovered theme that has been doing well. You're expecting it to be a decadal theme still. That's the interesting bit. I just want to go back to the point, Sandip, on the TCS earnings and the read-through that we are getting from either the ISG data or the earnings of TCS. On BFSI and North America, there seems to be a semblance of recovery. And I think that's the reason you have emphasis going higher, because that's the one which gets impacted the most by BFSI. Are you willing to call a recovery in BFSI yet?
See, I will again say that because this is a B2B business, it is always very difficult to call out when, just to give you two quick examples, post Lehman crisis, I remember one of the largest Indian IT company gave a revenue decline guidance of 5 to 7% and they ended up at 20% growth that year. And similarly, post-COVID, if you go and check, in March quarter, most of the companies gave negative growth guidance for the upcoming year and they all ended in 20% growth. So the point I'm trying to say is because it is B2B business, the decisions are very quick, and once their decisions are taken, they are very big in size. So growth inflection point can come anytime. The best way to judge that is that there are no deal cancellation for last 2-3 quarters. There is no negative news. It means that the business is stabilized, and from here only positives can happen. And also remember all the numbers of the cloud providers. If you see Microsoft Azure or AWS, the numbers are so robust. This ecosystem finally pushes the demand for outsourcing in some or other way. So everyone will be beneficiary. It will flow down to different type of players at a different point of time. So I think there is the growth will definitely pick up across sectors. It may take 1 or 2 quarters. As I said, the recovery will start with margin followed by growth.
On that note, we let you go. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.